Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the small caps that were in play on Friday. So first up, let's take a look at RGSE here. This is Real Good Solar. Had a very nice move on Friday, closed up 23%. You can see here RSI and Fasto are both in the 60s. They're both in the bull zone with room to run until overbought levels. There was a bullish crossover here on ADX. You can see the green line crossed over the black line to the upside, a signal the bulls are heating up. Check out the volume spike. There was a giant volume spike on Friday. So there was big money behind the move. It did break a couple of key levels. It broke back above the green line, which is the 50-day simple moving average at 38. And then it also got back above that middle Bollinger Band at 36. Now, the big level to break is going to be the gold line here. That's the 100-day simple moving average at 43. You can see here it was trading above that level intraday, but it did pull back. So for next week and for Monday, what you're looking for is a close above that level. If it can close above the 100-day simple moving average, that should signal more upside potential. The next key level to break would be the closing price on the 28th. That's right here at about 49. If you can get above that 49, you have the close over here from the first week of July, which is right up here around 53 or so. And so if you could clear this 49, if you clear 43, 49, and right around 53, it could really get running. That's when you could get a run potentially up to the 200-day simple moving average at 77. Keep in mind, if it fails to close above that 100-day simple moving average, that's going to signal more consolidation. Right now, it's in this sideways channel, and you can see here it's been bouncing off this 32 support zone. What does look interesting is it did form what looks like a double bottom type of setup, where you had a bottom down here in July and August at 32, and then it came back up, ran up here into the 50s, and then it came all the way back down and found support at 32 again. And so now it's trying to head higher. So if it can hold that 32 level, break above resistance, it could get running. Now, I did talk a lot of trash about Real Good Solar in the chat on Friday, and that's just because a lot of people get stuck on this one, and they do dilute very heavy. But every dog has its day, and you never know. This could be the one where they break it out and run it. It traded above the 100-day simple moving average and pulled back, and that was a signal to lock in gains before the bell. It needed to stay above that level. If it can trade above that level on Monday, it'll be back in play according to our rules, but that was a bullish close, and it is trying to break resistance. You can see here that it did close above the closing price on September 18th, so it does need to stay above that level. The chart is heating up. It just has to bust through that 100-day simple moving average, so keep an eye on it. Yeah, and if you look here at the 15-minute chart, you can see the 15-minute chart is still really strong, and it was still in play according to our strategy because the middle Bollinger Band was still holding. You can see here the dotted purple line at 426. As long as that was holding, it kept it in play. And so even though it did consolidate, it didn't break below that middle Bollinger Band. If that does break, the downside risk is it comes down here and tests 38. But that said, it did break above the 100 and drop back below. That playing it safe was the lock in gains. But the 15-minute chart did still stay bullish, and there was big volume. So it was a tough call on Friday. You can always jump back in on Monday if it gets running. And Real Good Solar, I love the company as far as the products that they sell. It's a really cool store, and yeah, it's been a great asset to Hopland. But yeah, they just love to dilute. So yeah, let's look at CIFS here. So yeah, closed up nearly 29%, and you can see here the RSI is at 29. Fasto's at 30, so it has a ton of room to run here. It's been really beaten down. You can see here it's been in this just nasty long downtrend, and so you can never expect a dog like this to completely reverse, but you never know. It could heat up. It had this big volume spike on Friday. Unfortunately, it did have the upper wick, so it looks like some people were selling shares off of that EMA 13 at 259, this orange line. Okay, that's going to be the second big level to break. They pulled it back and it closed back below EMA 8. And so right now it has a setup where it's in between EMA 4 at 197, that's the pink line, and EMA 8 at 216. Okay, so trading above 216 next week is going to signal upside potential, and then it's going to have to get above this 259 level, the EMA 13, and then dropping below 197 will signal downside risk. There is a gap, an unfilled space between high of day on Thursday and low of day on Friday, and so that gap would fill on a drop below EMA 4, and this stock is only in play for a technical dead cat type bounce if it stays above EMA 4. Dropping below EMA 4, as you can see, you do not want to be long this stock if candles are forming below the pink line. It's a similar setup to right here. It got above EMA 4. It has to stay above. If it formed a candle like this candle right here and closed below, that would be a signal that you need to exit, because you could see what could happen. It could drop for multiple days. So yeah, this is a super risky play. Just keep an eye on it. We'll see if it can heat up. It had a PSAR bull flip down here. If you look here at the 15-minute chart, you could see it does have the gap between high on the first, high of day on the first, and low of day on the second. And so the downside risk is a drop to 75 to fill that gap. Now the upside potential is if it can stay above this 200 simple moving average at 206, it has to break the high close from the second and from Friday and above the 300 simple moving average. If it's trading above 236, that should signal it wants to head higher. Then it has to get above the 400 simple moving average at 251. So basically 236, 250, trading above those levels signals it wants to head higher. If you see it drop below 206, that's going to signal downside risk. It would likely drop into the 180s and test this 50 simple moving average, 100 simple moving average. If it does that, it's more than likely going to fill the gap and drop down to 175. Okay, let's look at CRMD. Keep an eye on this stock. It's heating up. It had a nice day. This is one out of the setups on here. This is, RGC has some potential if we can get above the 100-day simple moving average, but it really has a bad history. But CRMD here, closing up 20%, has an interesting chart setup. And so you got RSI now at 52, so you can see it drop below 50, and it just closed back above, and so that's a signal the chart's heating back up, similar to back here where it dropped below, dropped back above, and then notice how that was right here. The start of the run. And so that's what makes this look interesting. This could be the start of the next push if it follows through. They always have to follow through. So right now it's back above 20. Look how it's heating up here on ADX. You can see how the green line to back above 20 on Fasto. If the green line plus DI crosses over the black line ADX, it's a good signal the bulls are heating up and starting to take control. As you can see, it had a big pullback. It made a high up here of 240 on the 15th of October, and they drove it all the way down to the 50-day simple moving average. You can see it almost hit the green line. That's always the reload zone. If you get a pullback on a stock that's in an uptrend, it's in an uptrend because it closed above the middle Bollinger Band back here at the end of August. And notice how the middle Bollinger Band held the dotted purple line. So it was in this nice uptrend. And once it pulls back, if they break below the middle Bollinger Band, the next support level is the 50-day simple moving average. If that holds, that's the reload zone. That's what happened here. So congrats to everybody that's been following our strategy. Once again, that worked well. Loading off of $1 because it closed at $1.27 and back above EMA's 4, 8, and 13 on Friday. So if it can stay above all three levels, the middle Bollinger Band at 143 will be the next target, and then above the middle Bollinger Band is this micro gap between these two candles, and so a run up to 160 would fill that gap. So basically, get above the middle Bollinger Band at 143, and 160 will be the next target. That's the upside potential if it can stay above these moving averages. A drop below EMA 4 at 115 would be a sell signal. Okay, look at CRMD on the 15-minute chart. This is showing the gap over here on the between the 18th and 19th. You can see up here at 160, and you can see it was in this downtrending channel. It found support at $1. You can see this was the support zone. This is the 50-day simple moving average on the other chart down here. And so whoever was loading off that zone, you got the low, and then now it's heading back higher. To me, it looks like it's filling the jar back up to 160. You have a clear break above the downtrend right here, and then now it's above the 300 simple moving average. If it can stay above this 350 simple moving averages down here at 160, 117, that'd be really bullish. It has to stay above that middle Bollinger Band at 126. If it were to drop below that 126 level, that could signal it's going to come down and test the 50 simple moving average at 116. It would just signal more consolidation. But this is a nice break above this downtrending channel, and then if it gets above this 137 to 140 level, and you can see the 130 level that it's at, that was the high close from the 23rd, and so it's hitting that level, the high close on the 23rd. Break above that, and then you have this this resistance from the 19th, and that's right around 137, 140. That was what it bounced off of when it had the gap down, and then if it breaks above this level, I think it should be able to head up to that 160 level, which would be the gap. Keep in mind the bottom of the gap is always tough to break. Okay, let's look at, and then look at the volume too. You have the nice pickup in volume. You always want to see that. When a stock is breaking resistance, you want to see that it's on volume. You can see that volume bar was one of the largest volume bars since back here on the 19th. So that's usually a good sign. Okay, let's look at GEMP here. This is a thinly traded stock. Keep an eye on it next week. It could get moving. It's back above 30 on our side, back above 20 on Fasto. You've got, plus DI and minus DI heating up here. And so, yeah, just keep an eye on this one. It's thinly traded. Look at the volume bars down here. But volume can come in. You can see it does have some days where it has some volume. And so it needs to have volume and then break above EMA 13 at 139. That's the big level. You want to see it trading above 139. The reason why I made the video tonight is because it closed the week above EMAs 4 and 8. The close on Thursday was above the pink line. That was the first close above EMA 4 since way back here, right before the last big drop. And so that signaled it was heating up, and then it followed through on Friday with a close above EMA 8. And so that's a good signal. The chart's heating up. They still didn't let it close above EMA 13. Notice how it's in this very tight sideways channel. It's at the top of the sideways channel, which is actually the bottom of the support from back here in August. Notice how it was bouncing off of this level, and then it went up, and then it came back down, dropped below that level, and now it's resistance. So what was once support becomes resistance. If it can break above this level, that should signal that it wants to head higher, and then you're looking for a run up here to the middle Bollinger Band at 153, break above that, possibly back up here to the 50-day simple moving average at 177. So keep an eye on GEMP, G-E-M-P here. The 15-minute chart has really heated up here. It's struggling with the 300 simple moving average at 136. That's the blue line. That's always the big one on the 15-minute chart. Once that level turns into support after trading below for an extended period of time, it's usually a signal that the chart is bullish and back in play and wants to head higher. And so you can see it's hitting this resistance from back over here. It's at 140 from the 22nd through the 24th. And so once it gets above 140, that should be a signal that it wants to head higher. You have to get above the 400 simple moving average at 145. If it pulls back, it has to stay above the middle Bollinger Band and the 200 simple moving average at 130. And then look, you have the 50 simple moving average as well at 129. That's a big support zone, that 130 level. It really needs to hold that in order to stay and play for this bounce. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.